Hey y'all, Katie here with Team EvoAZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Hey, everybody, and welcome back to another episode of the Arizona Monthly Market Housing Update. It's Katie and
Matt and Ryan. Welcome back, everybody.
what's up? Hey, team. We have a big announcement to make today, don't we, Ryan? And actually, it's not our announcement, it's yours.
It is, yes, yes. Thank you for giving me the opportunity to make the announcement here on our podcast. It was a hard decision, but I've only worked with one mortgage company my entire career, but I decided to actually open up my own mortgage company. Yeah, thank you, Katie. Thanks for the applause, guys. But over
Yay!
the past 15 years, I've built relationships with some top banks, and I recently got an opportunity to partner with them directly and working directly really gives me access to even more programs and better interest rates. We always want to do what's best for our clients, and me being able to work direct will really ensure that we're giving them the best. And that's actually why we named the company. The company's Your Best Mortgage. It's a very easy website. It's yourbest.com. We wanted to keep it simple and short. So same team. If you worked with us, it's just myself, Stephanie, and Amber. And same great service, same phone number I've always been using, but we're just able to offer much more for our clients. So we're very excited about it.
Awesome. Well,
That's
congratulations
awesome.
again to both you and your team. And I just love that our clients are, and your clients too, oftentimes they're the same, are
Yeah,
at the forefront of your mind, and you're keeping their best interests in mind. So thank you for doing that. That is one of the many reasons why we love working with you. So congratulations on your new venture, Ryan.
thank you so
Absolutely.
much, Katie and Matt. Appreciate that.
Awesome. Well, let's dive right into it. Let's talk rates, sir. How we doing over there?
Yeah, gosh, I can't believe it's first quarter down already, and it's been an eventful one. As we discussed earlier in the year, if you guys were listening in, every market expert predict rates to drop this year. Obviously, the main catalyst for this is inflation significantly dropping. It's hard to believe, but we were at 9% at one point in 2022, and it's about 3% today. So we've seen really good progress on dropping that down. And the rule of thumb, of course, lower inflation pressures mortgage rates lower. It's the bottom line. It's always been like that. So because we've seen so much progress, the Federal Reserve plans on cutting the funds rate this year, which will really help mortgage rates continue to drop this year. But the issue that we're having in the first quarter is the economy has been very resilient. It's been
Mm.
stronger than expected. Job growth has been steady and growing in certain areas, and spending has also been pretty high. So this leads to really, bottom line is more spending, more money circulating, and as more money's out there, that really leads to kind of, higher inflation. So the Fed was really hoping to get the inflation closer to 2%, but we're around 3 right now. So it's being very what they call stubborn. so
Mm.
so as because it's harder than expected, really, mortgage rates sometimes they'll take a little bit of a jump when we see those hotter than inflation numbers and not seeing the drop that we hope. But then what happens, like over the past, 3 months, the Fed will come back out and they'll say, hey, we've still seen progress, and we still plan on cutting rates this year. And then we see rates drop back down. So I really feel like, just from what we've seen so far, the big story this year will be how long the economy keeps strong. A
Mm.
lot of experts predict, the job market to finally show signs of weakening and more companies letting people go and those people finding, it's harder to find a job out there. And maybe because of that spending will stall. They do expect that could happen and that will lower inflation, lower mortgage rates. The Fed will cut rates and, we'll really see a big improvement in mortgage rates from there. So that in a nutshell is what we've seen so far.
So we're still holding positive intentions.
Yes, bottom line. Yep,
Awesome.
not yet, but it will happen. That's what it is. It's a little slower than we were hoping.
Right, right. No, that's what we're seeing too. How are applications, mortgage applications, I should say?
God, my team, we've really found in the past 30 days, it's really picked up.
Okay.
Even though rates have been pretty steady and they've seen increases in certain times, I think there's just a lot more out there in terms of inventory from like the last quarter of last year. And people are really seeing homes more in the price range and the areas that they want. People who have been on hold for a while last year are finally kind of stepping
Yeah.
forward and really getting back out there. That's what I'm seeing. How about you guys?
Yeah, absolutely. So speaking of inventory, I actually have a little slide to share with you guys today. Slide Girl is at it again. And this is directly from Armless, and it's from January of 2023 through March of 2024. And you can see where we kind of peaked here and, in January of 2024 with our inventory levels, and we're kind of traveling in the downward trajectory now. So we are, and we're seeing this and we're feeling it out there. But one thing that I want to point out, and something that Michael Orr mentioned a couple of weeks ago, and he's the big real estate guru over at ASU Business and Real Estate. I don't know if that's exactly the name of the section of ASU that he works for, but it's something like that. And he says that Michael Orr calls February's numbers disappointing, but by no means disastrous, and simply states the market is struggling to gain traction. He reaffirms the balance between sellers and buyers only slightly favors sellers, and this is the important part, guys, and that in many sectors of the market, buyers have more negotiating room, but they don't seem to realize it, judging by the recent price movements. So they're seeing median price point go up, but they're still seeing opportunity for buyers to negotiate in many areas of the valley, and they're just not connecting with it. So maybe Ryan, they need some strong negotiators on their side, like some strong buyers agents on their side to really show them where it's at, right?
Without a doubt, yes. Every agent's different. You guys are the best negotiators out there, and
Thank you.
every time that we get contracts from you guys, you really get a great price and get concessions. And that's the big thing that we're seeing. We're still seeing sellers willing to give, seller paid closing costs or seller concessions, as we call it. We're seeing those on the rise actually over the past few months because certain price points, they do have homes that are sitting a little bit longer, and those sellers get a little anxious, and you have more room to negotiate to get those seller paid closing costs. So we are seeing those where the buyers are only really having to come in with their down payment and getting the closing costs covered. So yeah.
Yeah. And I also think, obviously when Michael Orr is looking at this, he's looking at the data. We can all look at the data and kind of extract what we want from that. And it can almost be arbitrary in a sense or bias on how you want to, make that data look. And I think the big thing that we got to consider and what we see is, we're boots on the ground. We're seeing what the consumers are dealing with emotionally, and also sellers. And when you really look at what our inventory is, yeah, you look at these numbers and they tell you what it is, but I think you got to look more specifically at that inventory and see what it's more made up of. And they're not just all the same product. They're not all the same situation. And that's kind of where I feel like there's probably a little bit of a, not the exact data in there because we're seeing it. If a home is priced right, it's turnkey, and there's a seller that is not in a distressed situation, which 90% of those homes are going to have that condition when the seller's not in a hurting position. They have the ability to hold tight, and they've kind of drawn a line in the sand and stating, I get it, you can negotiate all you want, but we're not going any lower than this. And we're seeing that. And then you have the other side where you have these distressed sales, whether it's going to be divorce or people are moving or someone passed away. And typically in those situations, the home itself is not turnkey. It's usually, it needs a lot more work, a lot more cosmetics. And so therefore you have a much different product. And the person that's going to want to purchase that product is now not saying, oh, I got to pay these higher rates or pay this higher price, but I'm also going to have to invest my time and my energy to kind of bring this up to speed. And people are going to see a little bit more traction on those. So when you're dealing with buyers and one buyer's like, listen, I don't want to put any work into a property. I'm sorry, I'm not in that position to do so. It kind of removes a lot of the so-called opportunity. And they're stuck with the ones that they're turnkey, ready to go, and especially in those areas that aren't buyers markets, they're more on the seller side. And I think that's kind of what's giving us this balance.
Yeah, I agree. It's super area specific. In fact, I have some examples for that. And then also I agree that the handy buyer right now, or the buyer that doesn't, it doesn't phase them to replace the carpet, do a new paint job, that kind of thing. They are definitely winning. Case in point,
100%.
Chandler is probably one of the hottest sellers markets right now, or one of the hotter sellers markets right now. And we just had a listing, Matt, if you remember, of course you remember, over the weekend in Chandler, and it needs a bunch of work. We priced it properly, and we had over 50 people through the door in the first 4 days with 5 offers on that property. And this is something that's going to need a little bit of elbow grease.
And we're
So,
talking a price point over 700,000.
correct. Yeah.
So you're not talking about a home that's someone, I mean, this is I think a good indicator, like you're saying.
Yeah, it really is. So to jump over into that conversation, just to give you guys a quick snapshot of what's going on in terms of what areas are in buyers and sellers markets. And this information is taken from the Cromford report, and it's just a couple of weeks old, so still fairly current. In buyers markets, you're looking at Buckeye, Maricopa, Goodyear, Casa Grande, Gold Canyon, and Sun City West. For your
Wow.
sellers markets, like I mentioned, there's a lot of East Valley cities on the list here: Chandler, Gilbert, Glendale, Fountain Hills, Mesa, Phoenix, Tempe, Avondale, Scottsdale, Peoria, Anthem, Apache Junction, El Mirage, Laveen, like we've been talking about the last couple of months, Sun Lakes, which we're taking a listing over in Sun Lakes in the next couple of weeks. And yeah, it's hot over there, guys. And that's mainly 55 plus, and Tolleson. So those
Wow.
are your sellers markets right now.
And if you were to look at a map on that, you'd see exactly what that is. All the sellers markets are going to be more closer to the epicenter. All the ones that you said that are actual buyers markets, they're on the fringe.
They're a little out.
Those are
Yep.
cities that
Yep.
are further out. They don't offer the
Yep.
amenities all located right there. But once again, there's good speculation on that side. And I think what buyers need to remember is it's very difficult when if you're not an investor and you're a first-time home buyer, or even if you're newer, everyone's always trying to get a good deal, right? How do you
Yeah.
get this good deal? And no matter what, in order to get a good deal on real estate, I don't care how you do it, you're going to have to do something than just buying. So you're either going to have to take some more risk. And we saw that in previous markets where, hey, you were kind of anticipating things to go up, so therefore you're purchasing. In these markets, if you're going to really look for a good deal, the risk you're taking on or the extra work is going to find that home that needs a little bit of work. And that's where you can find those deals. It is going to take a little bit of work, a little bit of extra capital on the side, a little extra stress, but that's how you can make that investment. But to just think that this is a timing thing and it's just that simple, it's never that way in any market.
Yeah. No, I totally agree with you. Fun fact, remember the last couple of months we were talking about Queen Creek being in a buyer's market. Well, they have moved up and they are now balanced. So just
Yeah.
wanted to throw that out there. Queen Creek is moving and shaking right now.
Yeah, and a lot of their new builds are really picking up. And I think that's kind of what was the soften factor of out there is there was a lot of new builds that were able to get creative and give these rate buy downs and include these things to get the consumer to say, hey, it's worth buying a new build than buying a resale. So therefore you saw that reset. And then I think, the other side of this too, guys, is the rental side of things. Our rental market is always kind of the forecast of what's happening in our resale market when you see what's happening there. Our rental market has a whole new ingredient thrown into it here over the last 5 years, and that's going to be the whole VRBO, vacation rental. And you look at, the fluffiness that had to it and the appeal it had, almost like the tulip mania back in the day. And it had all these people kind of like, I want to jump on this bandwagon, and it was artificial. And now you see a lot of restrictions and stuff being implemented by local municipalities, and that's affecting things. And then you have people that just didn't do the math correctly and thought it was going to be a lot easier, and they didn't have the risk tolerance to weather the storm. So we saw this like anomaly where all of a sudden all these VRBOs jumped into the long-term rental market where they were taken from the long-term rental market previously. And now we're seeing that balance coming out. We've seen rental inventory absolutely drop a lot here since the beginning of the year. And typically that's not when we see the rental market drop in inventory. So that means prices are going up. Once again, another thing that's conditioning buyers to get ready and prepare for these rates.
Yeah, yeah, absolutely. Let's talk rate buy down again. We've mentioned it a couple of times, during this episode, and it's something that we talk about quite a bit because it's been really popular with the rates being as high as they are. Are you still seeing rate buy downs? Ryan, I had a seller, this was really interesting the other day, right out of the gate say, hey, should we offer on our listing concessions for a rate buy down? So yeah, she's thinking in the right direction. She's been doing her homework. So tell us a little bit about what's going on with that.
Yeah, Matt mentioned it how new constructions, that they're really advertising quite a bit these really low rates, and everybody's like, how are they getting these rates so low? And really, it's the program. I know we spoke about it before a few podcasts ago, but it's the 2-1 or 3-2-1 buy down what they're using. And what you're mentioning, Katie, is the seller does have to cover that, but they put the funds up for paying for the rate to be either 3% or 2% lower than the market the first year, and then it goes actually to 2% or 1% the next year, and then it goes back to the market rate the next year. That's been very, very popular just because we're inflated right now. People know rates are going to drop, in the next year. And so a lot of people are projecting to refinance. But the great thing about this 2-1 or 3-2-1 buy down is the money that you get from the seller to lower the rate. Whenever you do refinance, whatever you don't use comes back to you actually. So those have been really popular because it's not just throwing away your money. Because if you do a permanent buy down, that means you buy the rate down for the full 30-year term. It's not temporary. But unfortunately, you'll lose that money if you do actually decide to refinance. So a lot of people are actually not moving forward with that program. They're just doing the temporary buy down, just anticipating rates to go down. But it's funny because, like I mentioned, Matt saying how new bills are offering these crazy good deals. The one thing that we've noticed, and I just kind of want to give you guys a little bit of a tip on this, is that a lot of the new builds, though, they'll also have a little higher interest rate than the market, and they kind of do that to kind of bake in a little bit more profitability. So if you ever do have a situation where you're actually purchasing a new construction and you get a lower rate from the new build lender, definitely let me take a look at it actually, because I can look at it and compare with all the banks that we work with. A lot of the times I'm able to get a better deal and actually send it in to the lender and have them drop the rate while still giving you the builder incentives. So just be on the lookout for that because we've seen that a lot. And I'm actually able to help negotiate you to get a better deal while you're still working with them. And I'm completely okay doing that. I want to make sure you get the best deal, even if it's not with us, even if it's with the lender that you're working with a builder. So just wanted to mention that as well.
Awesome. I really
That's awesome.
appreciate that. So not only are our clients now getting a great deal, but they're also getting the same great customer service and experience that they've always had working with you. And we appreciate that so much, Ryan. We understand because we've been around the block as long as you have, and we understand that experience really matters. So thank you so much for being that resource for us.
Oh, thanks, guys.
Absolutely. That's huge. And I think advocacy is so important, for any of these financial arms, lending, all this stuff. I almost feel like insurance at the same time as a consumer, there's so many things to consider and so many things to know, and they're always moving based on markets. And so to keep up is almost impossible. So you do need someone kind of advocating for you and helping you go the right way. And when you're dealing with a builder and your builder's lender, well, the builder's lender is the builder's lender. I mean, they are looking out mostly for the lender. They're not really looking out for you. They're attached to this deal that you're going into. And if you're not represented by a realtor in a new build, guess what? No one's looking out for you. Everyone now is just looking out for the builder. And that's something that's very, very important to remember. And take advantage of resources like us and asking these questions, because you'd be very, very, very surprised to see how Ryan just said he would do this and give you the advice and do that pretty much for free. Well, for free, because he wouldn't be involved in that transaction. And same with us. We're always just looking to give the information that's going to steer our audience the right way and keep them, in good position.
Absolutely. That's why we're here. And that's why we're on this podcast today. Right, guys?
Yep.
Awesome. Well, congratulations again, Ryan, on the move and the new venture. We are so, so very excited for you. If you guys want to check out any of our previous episodes, we've been doing this for years now, guys. So if you want to see if we were right back a year ago, then go over to our YouTube channel. It is at Team EvoAZ. That's our handle. If you prefer to listen to the podcast version, over to your favorite podcast platform, do a quick search for Arizona Real Estate Radio. And that's where you can connect with us, do all the things, download, like, notify, subscribe. And we are very, very grateful that you continue to come back month after month to listen to us here. So thank you again, guys, and we'll see you next month.
Absolutely.
Thanks, everyone.
Thank you, guys.
Bye.
Take care.